Our story takes us to Ghana, where the West African country is grappling with its worst economic crisis in decades, marked by high inflation, currency depreciation, and mounting debt. To ease economic hardship placed on ordinary citizens, Ghana's new government, led by President John Mahama, has decided to scrap several COVID-era taxes that were introduced in an effort to secure a financing from the International Monetary Fund.
Marches through the streets of Accra. Demonstrators want to build momentum against what they say are exploitative international loans. They say Ghana's repayment of external debts has come at a high cost, forcing governments to compromise on development.
Ever since President John Mahama being re-elected as Ghana's new leader, his administration embarked on an intense journey of pulling the nation from a deep well of debt, plus numerous long-term economic hardships. Ghana is among those African nations that are debt-stricken with a need to find immediate solutions to avoid severe consequences. The West African nation is in hardship of a high national debt, corruption, political instability, inadequate infrastructure, limited access to education and health care, and the impact of climate change. Though the nation possesses many major resources like coal and gold, it has not helped Ghana's economy much to sustain its high debt burden, a thing that needs urgent attention by not only the administration, but also the citizens at large.
To participate in this rally, just like many other participants that come from different parts of African countries. And we are here to do a conscious awakening rally to make our people understand the burden of the debts, how it's affecting all of us.
According to the World Bank, simulations suggest that in 2022, nearly 850,000 Ghanaians were pushed into poverty due to rising prices and the loss in purchasing power. The new President John Mahama's administration is having an intense work of fighting with a historically high level of public debt, nearly equivalent to the country's gross domestic product, GDP. The new administration just made history of transforming Ghana's currency, the cedi, into high-performing currency surpassing the Mr. US dollar. This made headlines globally, leading to IMF to come out with dire warning to the government of Ghana to stop flooding the cedi into the economy. This was good news to the country which has been among the African countries having the worst performing currencies. But it came at a cost of being monitored by the IMF with fear that the cedi may fall into what the Zimbabwean currency fell into that continues to make headlines globally. Coupled with slashing taxes that had been stressing the Ghanaians' pockets, the country is now experiencing inflation drop like never before.
Gentlemen, members of the media, and all Ghanaians joining us. Today, I present Ghana's Consumer Price Index and inflation figures for September 2025. These are more than numbers. They shape the cost of living for households, guide the choices of businesses, and inform the decisions government makes for our economy. Let me begin with the headline figures. In September, inflation stood at 9.4%, down from 11.5% in August, and far below the 23.8% we recorded in December last year. This is the lowest rate in 4 years, and the 9th consecutive month of decline. Month on month, prices rose by 0.9% between August and September. This means prices are still edging upward, but at a much slower pace than before.
From over 23% in 2024 to now 11.5% to again 9.4% just recently in September 2025. Indeed, history will remember this magnificent achievement by a country that needs relief of economic burden. According to an article by Africa Report, Ghana's gold exports rose 76% to $5.2 billion in the first quarter of 2025 compared to a year ago, and cocoa shipments tripled to $1.8 billion between January and March this year. The Africa Report adds that the performance fueled a virtuous circle of commercial rethinking in Ghana. The ascent of the cedi, rising 43% against the US dollar, is also helped by external factors such as the generalized weakening, deliberate or otherwise, of the US currency since Donald Trump returned to the White House. On July 8, 2025, the president officially launched Ghana's first national anti-smuggling task force with a specific mandate to combat illegal gold trading. Indeed, Ghana has been losing quite huge sums of cash from smuggled gold, with the headlines making loss of over $11 billion lost from smuggled gold. As Ghana continues to fight its debts, Africa's sovereign debt has reached $2.14 trillion US, with 22 African countries at high risk of distress and 4 already in default, that is, Chad, Ethiopia, Ghana, and Zambia. Today, 7 African countries spend more on servicing debt interest than on education, and 25 spend more on debt interest than on health. Reports suggest that in a single year, Africa received $162 billion in loans, aid, and remittances, but lost over $203 billion through illicit financial flows and profit repatriation, a net annual loss of $41 billion. Opaque resource-backed loans, high domestic borrowing, and the need to finance infrastructure gaps have contributed to this debt, which requires greater fiscal discipline, structural reforms, and better debt management strategies to ensure sustainability and economic growth. Because of an onslaught of largely external shocks over the last half-decade, Africans have had to divert attention from their development prospects to servicing an unsustainable level of external debt payments. Recent external shocks, primarily the COVID-19 pandemic, the war in Ukraine, and tightening global financial conditions, exacerbated Ghana's pre-existing fiscal and debt vulnerabilities, leading to soaring inflation and an unsustainable debt burden that forced the country to suspend most external debt payments in December 2022. These external shocks, combined with pre-existing domestic vulnerabilities like a weak revenue base and structural issues, led to a sharp deterioration in Ghana's fiscal position and a drastic increase in public debt, culminating in a suspension of external debt payments in late 2022.
Why should African countries borrow so expensive as compared to its peers in other parts of the world? Why should it be? Why should the risk premium for African countries be so different from Europe, America, and other parts of the world? Why should that be? And because we are borrowing so expensive, we have so little debt, but the debt servicing cost is so expensive. And so maybe the time has come for us to look at what constitutes the cost, the spread that adds to the debt servicing cost for African countries.
The president's goal is to ensure Ghana's commitment to responsible debt management and inclusive economic growth, emphasizing the country's ongoing efforts to enhance fiscal stability and create a prosperous future for all Ghanaians. Bearing in his mind that his victory stemmed from popular frustration with the high cost of living, Ghana's debt crisis, government mismanagement, and a sense that the country's democracy is not functioning as it should, President John Mahama is busy like never before. As he continues his task of getting Ghana out of its economic hardships, he still needs to deal with the $3 billion loan from IMF that was obtained recently. with total disbursement of $2.3 billion as of 2025 out of the $3 billion. Ghana carefully enjoys improved economic indicators like higher growth, better fiscal and external positions, and declining inflation, alongside necessary policy adjustments such as debt restructuring, fiscal discipline, and reforms in the energy and financial sectors. As it enjoys these fruits, however, the administration needs to continuously keep this discipline and avoid bad habits like corruption to ensure the good use of this debt to avoid again returning to severe suffering. Poor handling of a nation's external debt can lead to a debt trap, higher borrowing costs, reduced spending on public services, a weaker currency, inflation, and potentially economic default, which severely cripples economic growth and opportunities for citizens. Leaving that aside, Ghana has another serious issue to deal with. The country does not fully benefit from its significant gold and oil resources due to issues like large-scale capital flight, illegal mining and smuggling which undermine revenues, and weak policy implementation that fails to integrate these sectors into broader economic transformation and sustainable development. With capital flight, significant amounts of capital are lost from the gold sector through misreported trade values and illegal activities, with estimates suggesting tens of billions lost over decades. Again, with smuggling and illegal mining. The vast majority of gold produced in Ghana is smuggled, with foreign entities often involved in illicit trading, significantly reducing the country's earnings. As earlier said, that over $11 billion lost due to smuggled gold. This is why President John Mahama's administration is tasked with a job of combating weak policy and implementation. There has been a continued lack of effective policy development and implementation to manage extractive revenues and ensure they benefit the nation. The issue of patronage politics, where the political landscape may prioritize short-term distributive policies over long-term structural reforms, hindering sustainable development despite the potential of the extractive sectors, also needs to be tackled. The administration is also left with a task of combating weak institutional capacity, the capacity to translate mineral revenues into tangible socioeconomic development and improved living conditions that has been limited.